Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
Let's be real for a second. There are very few things that can make your heart drop into your stomach faster than seeing a letter from the IRS in your mailbox. It's this universal feeling of dread, right? But what if I told you that an audit doesn't have to be a total catastrophe? Today, we're going to give you a playbook, a guide for navigating an IRS audit calmly and effectively. And why would you be? Seeing that official envelope, it can trigger instant anxiety, and that's a completely normal feeling. So before we dive into the nuts and bolts, let's just all take a collective, deep breath. You can handle this.
Okay, so let's get into it. The very first thing you need to do is figure out exactly what you're dealing with. Not every single piece of mail from the IRS means a full-blown crisis is underway. So understanding the notice, that is step one. So it turns out there are really three main levels to this whole thing. The most common is just a simple letter. Maybe they're asking about a balance you owe, or they're just verifying your identity. Then you've got what's called a correspondence audit, which is all handled through the mail. Now, the one that everyone really dreads, the in-person examination, well, that's actually the least common. And that's pretty good news right off the bat. Okay, so you know what kind of audit you're facing. Now what? Now, let's get into the playbook. Here are 10 rules of engagement that are going to help you manage this whole process with confidence.
Rule number 1, and this is huge. Don't panic. Focus. Read that notice really carefully. If it says it's about your 2021 business return, then that is your entire world right now. Don't start bringing up other years. Don't talk about your personal deductions. The scope of that notice is your boundary. You've got to stay inside it.
Okay, rule 2 is absolutely critical. Answer only the question you are asked, nothing more. The IRS is very deliberate with its wording. If you start volunteering extra information, you might just accidentally open up a brand new door to a whole other line of questioning that you really want to avoid.
And rule 3 is all about mental discipline. Don't go creating new problems in your head. If the IRS asks you about your business meal expenses, don't start stressing out about that charity deduction you made 2 years ago. Stay focused only on the issue that's right in front of you. This right here, this is such a powerful mindset shift. You have to remember, the auditor is not some all-powerful being. They're an employee. They're doing a job. They're following a manual. They are human, and that means they can be wrong, they can misinterpret things, and you absolutely have the right to challenge their conclusions.
And that leads to a really crucial question. You've laid out your case, you've provided your documents, but the auditor, they just don't agree. So are you stuck? Is their word the final word? No way! Absolutely not.
You always have the right to appeal. And here's the really interesting part. The IRS doesn't always want to go to court. See, a court ruling creates a public record, a precedent. And if their case has some weak spots, they would often rather just settle with you than risk a judgment that could be used against them down the road. Which brings us to a key bit of strategy. Be firm, but don't be hostile. This is not a personal battle. Your goal is to get a favorable resolution. A cooperative, professional attitude just makes it easier for that agent to sign off on your position. You're basically giving them the justification they need to tell their manager, yep, this looks good, let's close the case. Now, this is a tough one for a lot of us, but you just can't rush the government. IRS agents, they have huge caseloads and they work at their own pace. Trying to hurry them along is usually just going to backfire. You have to accept that this might be a long haul. Settle in for a marathon, not a sprint.
But while you've got to be patient, you also have to be punctual. Every notice you get will have a deadline. You have to meet it. If you need more time to get your documents together, that is perfectly fine. Just ask for an extension. It's a reasonable request, and it's almost always granted. But missing deadlines, that just sends a message that you're not cooperating, and that is not going to help you.
Seriously, unless the issue is incredibly simple, get a professional to represent you. This is a crucial investment. Your tax preparer is often the best choice because they already know your file. They act as this critical buffer, keeping the emotion out of it and making sure every single response is strategic and professional.
Even if you know you've made some mistakes or you can't find certain documents, do not despair. There is almost always a path forward. Now, we're talking about good faith errors here, not, intentional tax fraud. For things like missing receipts or compliance mistakes, solutions can often be negotiated. The situation is rarely as hopeless as it feels.
Okay, so that's the playbook for how to handle the audit itself. But this brings up a massive question that everybody has. How far back can they even look?
Well, the answer lies in something called the statute of limitations.
So here's the general rule. The IRS gets 3 years. As soon as you file your return, a 3-year clock starts ticking. After that, you're usually in the clear. But look at that second path. If there's fraud or, and this is a big one, if you never file a return at all, well, that clock never starts. There is no time limit. They can go back forever.
And that leads to a really powerful piece of advice. Always file a tax return, even if you made no money that year and you don't owe anything. Why? Because the act of filing, even if it's a $0 return, is what officially starts that 3-year clock. It's such a simple thing that protects you from being questioned about that year a decade from now.
So as we wrap this up, let's just refocus on the big picture here. The absolute key is to shift your mindset away from panic and fear and toward calm, methodical preparation.
It is so crucial to remember what an audit typically is and what it is not. It's an administrative process. Its job is to verify accuracy and assess the correct tax. It is not, in most cases, a criminal investigation aimed at finding fraud and bringing charges. Just understanding that distinction can dramatically lower your stress level.
Okay, before we go, here is one last, extremely practical tip that could save you a ton of money and heartache. We've all gotten those suspicious texts or emails. How can you be 100% sure if it's really the IRS?
Well, the answer is incredibly simple. The IRS initiates contact almost exclusively through one method: official mail, a letter. They're not going to text you, they're not going to email you, and they're not going to contact you on social media to start an audit. Any unsolicited message through those channels is a scam. Full stop.
So the ultimate takeaway from all of this is this. An audit is not something that just happens to you. It is a process that you, with the right knowledge and professional help, can actively manage. You are not a passive victim here, you are a participant who has rights and a strategy.
Remembering that you are in control is everything. So I'll leave you with a question to think about. What's one small thing, one little step you can do today to get your financial records in better order? Because at the end of the day, preparation is the true antidote to fear.